Alright, what up boys? In today's video, I'm going to be breaking down the exact model and the trade that I took last night to make me over a 1 to 3R, how I can use time paired with price to catch these entries, because really you don't see anybody else trading with time, just their smart money, ICT, blah, blah, blah. But before I get into the video, I got to give props to my big homie Jay for teaching me the time fractal shit. I've always traded smart money. I've done it for about 2.5 years, but up until I met him and started implementing time fractals with the trading that I've already known, it has entirely changed the game for me. So without further ado, let's get straight into it. Get to the chart, understand time and price. So obviously this was a trade that I took right around midnight. It was just before 12:30. So we're going to hop over to our Solana chart. We are going to delete all of our drawings, go to replay mode, and then we are going to head here to last night where I took my short position. So the first thing that we need to understand is when you look at a daily candle, it is broken up into 4 quarters, right? And what those quarters are is your 6-hour candles. Okay, great. So 4 times 6 is 24. We understand that it takes 4 6-hour candles to make up a daily candle. Now, when you fractalize, you're already, fractals, your 6-hour time frames, right? You realize we have 4 of them. Okay, so now what we're going to do is we're going to take our 6-hour time frames and we are going to fractalize that once more. When you fractalize the 6-hour time frame, what this does is it leaves you with 4 90-minute candles. And this is where I take my trades at 90-minute opens and 90-minute closes. So we're going to go ahead. I'll turn my volume profile off here. I will keep my EMA 20 on. But what we're going to do is we're going to zoom in here, right? And the first thing that I can understand is price does 3 things, right? We accumulate, we manipulate, and we can deliver. So what we saw with the first 90, right, because we had the first 90 of that current 6-hour, right, and what that current 6 was the first 6, the 8 p.m. candle, right? We had the first 90-minute marked out here with this kind of faded orange. We have the second 90-minute marked out with this darker yellow, and then we have the third 90, right, marked out in the blue. And the third 90 is my ideal time frame that I like to trade. Now, when we look here, we can see that we're kind of just consolidating during that first 90. We slowly grinded down, but no clear moves were made. The second 90 was a bit clearer, but what we had instead of a clear push down was the first clear push down, and then we just consolidated, right? All we did was accumulate. So after we see our accumulation, we can then see our manipulation period down here, and then we get the delivery up. Now, I knew that overall we were selling off, but in order for us to sell off, we must see pullbacks to equilibriums of the range, right? Just rebalancing price, putting it in a discounted point. That way sellers could step back in to short it. Now, I like to trade time shifts. What does that mean? That means that if time is shifting here, right? We had that previous 90 at 11. There was no trade then, right? If you see here, I tried to take a long position. I got stopped out break even. And then I waited until 12:30. Right, and basically what I saw coming into that 12:30 or that new 90-minute candle, right, that fourth 90, again, because we have our first 90, our second 90, our third 90, and then our fourth 90, right? And then that fourth 90-minute closes at 2 a.m., and that's where your new 6 opens, right? And you don't see guys on YouTube talking about this, by the way. Name me another guy that's trading with time fractals on crypto. So all that I saw with the time shift was the fact that we had inversed our gap, right? Created an inverse fair value gap right here, or I can mark this out with this rectangle, right? We have our inverse fair value gap, as well as our inverse fair value gap. We have our liquidity sweep, right? We have the big push up manipulating the internal highs from our previous 90. So I see that we have our IFVG. I see that we have our liquidity sweep. Right, and then if I really zoom in here, right, you can identify the fact that we have our change in state of delivery here, right, or your break of structure or your change of character or whatever, right, but all we're identifying is that structure is shifting, right, buyers were in control, now they're failing, right. How I can kind of indicate that is with this wick, with this inversion, and with your break of structure, change of character, CISD, blah, 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 right, and then obviously heading over to BitUnix here, this is the broker that I trade on. You can see here, right, with that first third 90 here, right? So that first 6, third 90 right here, I took a long position with the open low, and then we stopped out break even. But then the trade that we're currently talking about what we have, again, we'll draw it up here, is the inverse fair value gap, right? The liquidity sweep right here, indicated by this wick, right? Also, your break of structure, your change in state of delivery right here, right? And then obviously, as soon as we got that change in state of delivery as confirmation, right, with this candle closing below, I entered on that next candle, the micro pullback, and then obviously I took profit as we were pushing down into that former support. But that's it, right? All we're doing is pairing our smart money concepts, but with time fractals, right? With higher time frame candle opens and closes to be patient, catch these better entries, and actually find the smart money. Because it's one thing to understand how liquidity sweeps work and fair value gaps and blah, blah, blah. But if you're not pairing it with time, right, then you have the where and the why, but you don't have the when. So you're missing context. Right? Again, you have the where and the why, but you do not have the when. So you're missing context. This is why pattern trading is looked at as gambling, right? All these NQ guys that just trade their ICT concept are looked at as gamblers because they don't have the when context, right? Because when you look at a chart, it shows you two things, which is what, right? You have your axis over here, which is showing you price, and you have your axis down here, which is showing you time. Why is it that as traders, we only look at price and we don't look at time, right? And I say we because, that's you, not me. But as I've learned to pair time with my smart money concepts, right, it has taken my win rate from, 50 to 60% to minimum 75%. So at the end of the day, you can keep trading how you have been trading, or you could just go ahead, back test the model or the, strategy that I have taught you today. Use time fractals, use time, right? Because again, on the chart, it doesn't just show you price, but it shows you time and price. So when you can begin to pair the two together, everything will change for you. But if you're not already in the Discord, it's going to be the first link in my bio. If you're not already signed up for the Broker Unix, that's going to be the second link in my bio. Make sure you do both of those. We stream live every day on Discord for free, Monday through Friday, 9:30 to 11 a.m. Eastern. If you're not already in there, I don't know what you're doing, but if you are, I will see you tomorrow morning for the live stream. Peace, guys.